Mile IQ is something I use. It's really fantastic because every trip you take, you can swipe one way for business and one way for personal, and it'll track it really easily.
I use it too, and then I send it really tiny so that Paul can't read it.
True story.
The only thing I forget to do is because of Easy Pass. Yes, it's easy, but yes, then I forget, so I didn't send that to you. But like, I have to go through that log. You can actually add them to your Mile IQ, but I haven't done that. Is there anything else anybody's using, any kind of tracker anybody else is using?
I use the Hurdle. I mean, I don't have any issues with it yet, but
What's it called?
it's called Hurdle. It's H-U. It's just there.
I'm just curious what everybody's using.
Yeah.
It does the same thing. I mean, I don't know. It tracks every time I get my car, and then I get the swipe right
Do you
or
pay
left.
for it,
I
or-
do not pay for it. It's free.
Well, there you go.
Yeah.
So,
It's spelled
Hurdler.
H-U-R-D-L-R.
Ed,
There are many times when I'll go out or we'll go out. Sunday morning we go to church. On the way home from church, we go look at a property, show a property, whatever. So technically, my trip home is business. How do you differentiate? I mean, how do you prove that? How do you, I mean, if you get audited by the IRS and you say, I went 80 miles and I'm charging it off to business, how do you
Well,
prove it?
the app would,
The app,
Do it
you
that
can
way.
actually, so on here, you can do,
I know, but
so I could swipe that to business, and then you can log a note as to
Do
what
you-
you did. Place
do
the
you-
sign, put an open house for it,
you could keep a
if you really wanted to.
written log.
I mean, if you really wanted
So
to.
basically, I can make it up.
Yeah.
The IRS, what they would say to you, contemporaneous records are much more meaningful than non-contemporaneous records. That is, if you're keeping a daily something, as you're,
Don't trust you.
if you're doing it as you go. So if you do the log at the end of the year, don't sit there in one color pen and do 12 months.
That was my.
No, seriously, that's your mistake.
The other thing is, you could do it for a couple of months and project it. And they're
Yeah, they-
known to accept that.
Yeah, they call it
Do a
sampling.
sample.
Because I was audited, Diana and I were audited, they never touched upon that.
The mileage.
Yeah.
Yeah, it depends. If you're taking a lot of miles, I've got clients that take 27,000 miles, business miles. That's a lot of miles. If they got audited, that's probably something.
It wasn't a red flag.
Yeah, if it's, when they do
Not in this
audit, they
business.
don't do audits very often to start with, and you probably heard me say that before. Very, very rarely do they do audits these days, but if they do, they're not just auditing you in total, they're auditing specific lines on your tax return. So they will pick things that they think, things that they think they can make money on. They're out, and you need to think of it that way, they're out to make money. If they're not gonna make money on an audit, they don't wanna do it. If they do an audit of you and they don't find anything, they won't come back. If they do find something, usually they'll go back a year, they'll go 40, they'll dig around. So, if you were taking a reasonable mileage, they're not trying to pick up a few bucks, they're trying to pick up thousands. So if your mileage was reasonable, they may not look at it. The other thing that's a trigger too is, how many business miles did you have last year, John? You tell me you had 8,000 business miles. It wasn't 8,348, it was 8,000.
It cost us about.
So there's a lot of that that sort of plays into it.
Stop driving it, toll driving.
Yeah, just,
That's what it costs the IRS.
let's see, what else we got? Business meals, and we sort of talked about this when we were here a few weeks ago, but just quickly, remember, entertainment isn't deductible anymore. You can only deduct meals, but you can't deduct entertainment anymore, so tickets to baseball games and all that kind of stuff, not deductible. For meals, be sure you write on the receipt. This is sort of a special documentation thing. If you are audited, this is one thing they typically will look at because kind of subject to abuse. But keep the receipt, write on the back of the receipt who you were with and what business you talked about. Again, it's not a dissertation, it's just 2 cents. I had coffee with John, we talked about the real estate market. Period. And that's enough. So you don't, it doesn't have, but make sure you keep receipts. Where my clients have gotten audited, again, it doesn't happen often, but where they've gotten audited for meals and entertainment, not a problem if I got a receipt. Never had a problem with it, as long as you have the receipt. That's the key to success. Yes, sir?
We do a client appreciation at the Trenton Thunder. And basically, we provide the tickets, food while they're there. You're saying you can't write that off?
The key to success with something like that is, no, you can, the entertainment portion of it, you cannot. The meal you can, if it's billed separately. So if Trenton Thunder gives you a bill and this is for food, this is for tickets, you can deduct the food. If it's kind of all in if it's all in the ticket price.
I had a conversation yesterday with a client who had a new heading on his QuickBooks, client parties. I said, what was that? Well, we did a party we got a little band and we paid, for food and stuff like that. I said, well, why wasn't that a client meal? So we reclassified most all of it to client meals because it was food that he bought. What's the difference between taking one person out to lunch and having 30
But you
people?
can't write off the band.
The band you shouldn't be writing.
And
That's entertainment. Hard to make case studies.
Just this year.
Next time, gonna see.
2019.
Yeah.
I wanna make one.
Actually 2018, but
Yeah.
Couldn't do it.
they're just sort of figuring
Like
it out.
this year's taxes,
I'm sorry?
18 you could. and
so I could do it this year?
Not for 2000, no, I'm sorry, it went into effect for 2018.
Okay.
So this year.
Yeah, they're just sort of figuring out, this is one of those things, they're just sort of figuring out the rules.
I have an American Express, and there's an app for that. When I take someone out to lunch or whatever, I can take a picture of the receipt and get rid of the receipt. Because you can put a note in there. I met with Lisa, and she and I talked about building her business.
I missed that lunch. What?
Yeah, but a lot of credit cards have an app now
I eat a lot.
that you can take a picture of the receipt and not have to have a shoebox of receipts.
Do you have to have the detailed receipt, or can you just have the credit card receipt?
Credit card receipt.
Credit
So
card.
that's good enough, you don't have to have the itemized receipt.
No, they don't need to know that you had a chicken sandwich.
They used to have to have that, right?
No,
At
it's
some
just-
point,
Yeah,
maybe that was just corporate. so
yeah,
they didn't
probably.
see that.
They probably wanted to be sure.
Yeah, that's what, we used to have to submit
Yeah.
that first.
Home office, this was, again, you hear us talk about this all the time, but another good one, make sure you're sort of factoring this in. If you do work from home, you have a space separate at home. Doesn't have to be a separate room, but it's a partition space that you use for business. That should be kind of factored into your business, and your business expenses, and your tax deductions, and that sort of thing.
Is
And
that
it's
only if you, that's only if you own the home?
No,
Yeah?
no.
Because somebody asked me that, and I'm like, I don't know, how's that work?
No, if you
Yes,
rent out-
if you don't own the house, then you take a proportion of the rent.
Actually, we have clients in Philly who have like a 2-bedroom apartment and they pay a lot of money, and 1 bedroom is the office, and they get a huge write-off for that, because it's expensive and it's a big portion of the square footage. So they do better than somebody who owns a $400,000 house out here.
Yeah, you got 100 square feet is an
Right,
office out of
this is a
one.
tiny fraction of a big house here. Yeah.
Yeah, so, you probably heard us say too, that's also, this sort of helps you increase the mileage you can deduct. If you don't have a home office, it's your principal place of business, driving from home to the Keller Williams office is not deductible miles, that's commuting miles, and so it's only miles from here. So if your home office is your principal place of business, then all your miles become deductible. Yes, sir?
What about using a PO box for business address?
What about
In
it?
other words, have a PO box address for all of your
But-
business.
Yeah, if the key to success with a home office is, It has to be what the Irish calls your principal place of business. And what that means is it's where you manage and administer your business. It's okay if you can have 2 or 3 offices. You probably heard me say I had 3 offices in 3 states at one point. My home office was my principal place of business. Doesn't matter if you have an office here, but it's where you manage and administer your business, which means you make appointments there, you should get mail there. You make appointments from there, those kind of things. You can meet clients here, you can do training here, you can do all kinds of stuff here. But your home office is where you manage and administer your business, and so you should be able to demonstrate that in some point. Again, unlikely you ever get audited, but if you did, you should be able to demonstrate that. You should have some business mail coming there. It should look, taste, and smell like an office. It shouldn't look like a bedroom with a desk in it.
Do you have to have that as your address? I supply my address, I use this as my address, but my primary office is my home. But I don't give clients my home address or really anything. I mean, if I'm ordering supplies, I use my home address, but everything else goes here, just so that people don't know where I live.
Yeah, and that's okay, but make sure you have your Realtor Today magazine or whatever it is. Have
Your
that
business
delivered.
bank statement.
Yeah, your business bank statement, have it delivered to your house. When we set up LLCs, it's always from your house. The principal place of business is always, if they looked on the state registration, it's your home address. So it's all evidence that helps support the fact that this is in fact your principal place. Yes, ma'am.
The funny thing with that is when they do the workman's comp audits, they want to come to my house. Because that's, the LLC's through my house. And I'm like, how about if I meet in the office, the other office? And they do, they don't care.
You might even be able to do that by ask them. They're actually very nice people.
Oh, they're awesome, like it's
Yeah.
actually.
But you might be able to send them something like a QuickBooks report and your 1099.
I don't know, they look through my book, I'll have to show you my book.
Yeah.
And they love it. It's my
Yeah.
second one. And they're like,
But I've done this like with some nonprofits, and they're thrilled not to have to come out sometimes.
Oh, yeah, they seem to want to come out. But
Can you go back to that last sheet?
What's so interesting?
Probably they're remodeling her kitchen.
Yeah.
I'm gonna go redo my kitchen.
But all
So
your
like,
utilities.
like furniture and stuff like that, I can write off.
Like, if it's in furniture, they're direct expenses and indirect expenses. Direct expenses are things in your office, so
So my new couch in my living room cannot be.
not so much. But like you carpet your office, you paint your office, you have a desk,
But
chairs, a couch in your office.
she puts it in her office
Oh,
for
we'll
some
get it
period
in
of time
I
and
can
takes a
fit it in.
picture
We'll
of
get
it.
it in there.
And then
Yeah,
Not what day
it
they're
didn't fit, right? She got tired of it and moved it out.
How do they know,
If they are.
If they ever.
because you're saying like you have to have like a separate, and I do have a separate room and all that, but how do they know? Are they?
if you ever got audited,
Only if you
I
get
send them
audited.
pictures.
Unlikely, but
Yeah, it's unlikely you ever do, but you send them pictures, and it should look like an office.
And they want to see the couch.
I've never had them
in the office.
I never had them come out and knock on somebody's door, I wanna see your home office.
Or any
well, I mean, the other thing to think about,
Serious.
of all the money that you spend, what's the percentage that you're deducting for home office? Probably not very much.
Teeny tiny,
So it's
yeah.
unlikely that they're gonna really
Like,
drill
yeah,
down on
crazy.
that.
That's not the red flag they're looking
Right.
at.
They're just they think of it as this is a money-making venture for them, so they're not gonna audit you.
Thank you.
So, I know you guys asked questions as they were going.
Which we prefer. but-
Yeah, which was good. This was very good interaction. I had written down a couple of questions I think they hit. So I just want to make sure we go through this real quick before we dismiss. When I introduced him, I didn't tell you guys. This guy went to North Carolina, Chapel Hill, has a really cool degree, has business experience like you wouldn't believe if you could just sit down and talk to him and have fun doing that. This guy went to Bucknell, then he got a master's from Harvard. I mean, these are expert guys in business, accounting, everything. They help people like us every day. They really understand. And so their heart is to help you strategize all this stuff we just talked about and get the best out of the tax code we can, right, at the end of the day. So I just wanted to make sure I was clear on that. We're not talking to two guys that dropped out of high school, you know what I mean? And they drive a cool car now and stuff, you know? So anyway, one of the things was why and how do you set up an LLC, right, for real estate agents? These guys can help you do that. They can tell you why, and they also can tell you how. They'll actually do it for you pretty much, right? So there's some fees to this, but it's a one-time thing, right?
Yeah.
Is it easy to set up a profit and loss? We just talked about that at pretty good at length. Any more questions on that issue? We understand QuickBooks is kind of an easy tool to use.
I have an LLC question. At what point do you get an LLC?
How much income?
It's based on, yeah, you probably need $80,000 to $90,000 in gross commissions to make it worthwhile.
Yeah.
Great
Or-
question.
Typically, we'll
Great
say
question.
30
Or
30 to
beyond
50.
your way to that. When somebody come in last year from the Newtown office who was on the way to that and wanted to get it set up in anticipation of that.
Yeah, so that's kind of.
That's someone that's committed, by the way.
Right.
They know they're gonna have
In
a much
fact,
better
my
year.
first advice to her was, why don't you hold off? She said, no, I'm ready to do
Yeah.
this now. I want to do it.
Yeah,
The high level, and again, we're always glad to talk to people about it. And, you know, we've done this a long time, we love it, real estate agents. We will tell you if it makes sense, and we'll tell you if it doesn't make sense. You know,
they won't
never-
take your money just to take your
No.
money, I guess is what it
It's,
is.
we don't do that. The big two reasons you do it for tax and you do it for liability protection. As Paul said, gross commissions, yeah, 80, 100,000, you know, somewhere in there. If your business income is 30 to 50,000, you probably, it makes sense to do it. The key to success is don't come to us after you've already made the 100,000. Don't come to us after you've already made the 80,000. Anticipate, you know, look ahead. Do it before you hit those things, or you're gonna be in tears because you just spent $4,000 in taxes that you didn't have to spend. That's the key.
Carol, you had a question?
I have a question. I hope to sell one of my investment properties this year for, you know, say I sell it for like 100,000. Should I get an LLC and put that money directly in that account when I sell it?
Two different
I mean,
things.
That's gonna be a, maybe an appointment you make with these guys to
Okay.
sit down and tell like your whole story.
Okay.
Be glad to.
Thank you.
Mhm. But that's a good question. Kim?
What does it typically cost to set it up, and should you do it at the beginning of the year, or is it too late to do it for 2019?
No, you can do it anytime during the year. Again, but the key to it is you can't go back. So if you come, you know, if you come to me in April because you already made $40,000 or $50,000 in commissions
Right.
through March, you can't go back.
How
You know,
long
you
does
can
it-
start, we can
You
put.
start at that point.
You start at that point and go forward, so you really wanna make sure you do it before. But you can do it anytime during the year. Like, the
How long
cost
does
is
it take to do?
Couple weeks.
yeah, a couple of weeks
you
to
drive.
get, yeah.
Drive?
If you
Yeah,
drive,
a couple of weeks,
you have
if you,
Oh, God.
yeah, a couple of weeks, we can get it up and running. The tough part in the whole process is you have to get it approved by a real estate commission. And they're sort of pains in the patootie.
And they know how to do that.
Yeah, and so,
That's important.
But it's gonna take a ride to Harrisburg to do it.
Well, it's just
Well,
whether you take the ride. That's
yeah,
all.
if you,
Department of
if you,
State and the Real Estate Commission, Harrisburg's a little bit random on how long
Right.
things take.
The other thing I was gonna say, from my perspective as your operating partner, okay? You can't switch back from your LLC to your personal name with Becca all year long. I want you to pay it to me this time, I want you to pay it to my LLC this time. It would drive all of us insane, and it's actually something we're not allowed to do. So you have, like Danny say, if you're making a commitment to it, you're doing it.
Well,
And
you
then
also
you're
don't wanna change.
You don't wanna change. The purpose is to make the change and, because it's the right thing to do, right? But don't come to us halfway through the year and go, oh, could you make the, change this check back to my name. You can't do it, I won't allow it, just so you guys know, and it makes Becca pull her hair out because of the way we, book everything, and it's just, it's a nightmare. And by the way, we've been through it, I know. So it's not like no one's asked this.
Really?
Yeah. Robbie?
You just touched on a little bit of my question. Can your commission checks be made, do they need to be in your license name, or can they be paid to any name, any LLC?
If the LLC is approved, which is what he's talking about right
Yeah.
now, by the real estate commission, you can get the commission paid in that name.
There's a process you have to go through,
Okay.
and if you go through that process, and Becca knows that you've gone through the process, then you can, your LLC can get paid, and your LLC pays you.
Then you would pay yourself through your LLC, which is what a lot of us do.
Yeah. Big tax.
We take it on an owner draw or a salary or both.
Actually,
A distribution.
all the examples I had up
Yeah,
there
he had the examples of it.
were all, where someone's drawing a salary.
We talked about the balance sheet, right? When you start to make some significant money in this business, which many of you already do, and others of you are on your way, when you go for a loan, or it's way easier if you have a P&L and a balance sheet to send to the, right, because we're self-employed, we're problems for banks. We're not the most desirable people for lending. If Lisa's Jack was in here, he would tell you borrow as much as you can always, pretty much, because use other people's money, right? Keep cash, cash is king and all that. We could argue all day long on that stuff, right? I think you guys would actually be cool to go to the other side of that. Because you'd be like, no, pay cash or whatever. So, but there is good debt and bad debt, and we could have that argument on what that means, right? But at the end of the day, having this kind of setup makes it easier to loan money, to get money, right, in a loan and things like that. I gave these guys the chart of accounts and the MRA book, and Dan actually even bought it and started reading it and everything, especially in this category. They really understand setting up so that your P&L could look exactly like the office's, so that it, it's a familiarity thing. Also, we've had someone from Merrill Lynch, if some of you were here for that, Tucker Brown came in, he's the vice president of Merrill Lynch, talking about managing money. That's, the financial guy is important, but these guys are just as important in my view, because they can speak the right language together, representing you, helping you as well, or just giving you advice. My financial person said this, what do you guys think? These are high-level conversations these guys like to have, just like me. We can talk about the weather and we can talk about the Sixers loss last night as much as you want, but I'd rather talk high-level business and things like that when we're in this building, you know what I mean? So, and the last thing is, the new tax law, we did talk a little bit about that as far as it could really be a benefit for us, maybe in the 20% reduction for us in paid taxes. Can you just address that for 2 minutes, a few minutes?
Sure. 2 minutes is.
Yeah, I know. They need a half an hour, but
Actually,
Yeah.
I don't think we talked about sort of the owning real estate component of that.
Right.
When we were here last time.
No.
well, no, but I think we got from you guys on that one is own more real estate.
Probably.
From you, Paul, I think
Yeah, have a
actually some
kid.
comments
Yes.
you said.
Yeah, so,
And have a
And
kid,
have
more kids, yeah.
yeah, so the big thing, and this is truly a big thing, and if you were here last time, you heard me say it, I've been waiting my whole career for this, is the 20% business income deduction. So qualified business income, so you can take 20% of basically the simple version of it, you get to take a 20% deduction of your business income off your personal return. So if your business income was $100,000, you're only paying tax on 80. You get a $20,000 deduction. That's huge.
It's a new law.
It's brand new. It's brand
Now, is
spanking.
that for LLC or for?
Doesn't
a-
matter.
It doesn't matter.
It's a
sole
pass-through
proprietorship.
business, basically, right?
Yep,
It's a
partnership.
pass-through business, which is what we are.
Yep. Now,
So we should do better this year than we did last year.
Yes.
As far
if you,
as
yeah,
like
large,
owning less.
yeah, if you own your own business and you're making money, typically, you're gonna save significant money. There's a lot of,
Well, so there's some good news
That's
here.
involved.
yeah, there's a lot of pieces that going back and forth. They did away with exemptions and they, raised standard deductions, and some's good, some's bad. But by and large, if you own a business and you're making money, you're gonna be ahead of the game.
Especially if you made your tax payment quarterly based on the old rules,
Yeah,
that'd be even better, right?
right.
Yeah, although the flip side of this is, I've seen some first returns from people who just had W-2 income, and the withholding tables knocked down how much the companies were taking and sending to the government. So in both cases, the people owed more money than last year.
It doesn't make,
Same fundamental income.
yeah, but
So
keep
that
in
is not-
mind,
the
doesn't mean
tax
they were
might be
paying
lower,
more
but-
taxes.
But,
Right.
but
It wasn't paid.
it
It
was,
just wasn't paid.
right.
Didn't
But
come
that
out.
doesn't apply to us.
No,
No, okay.
unless you have a spouse that has W-2 income.
Or if you W-2
Don't need to worry
yourself.
about that.
You could W-2 yourself.
I don't do it too much.
I
We're
tried
mostly
Jack.
1099.
I may,
Yeah, depending on how much you have withheld.
right?
Right, yep.
One other thing, on the 20% business, and try to stay with me on this, it's a little bit complicated, but when it comes to rental properties can be included in qualified business income. And so if your rental properties are making money, that's a good thing. Because now you get to deduct 20% of the profit, of the profit on your rental properties along with your real estate business.
It's a huge advantage to
Yeah.
owning real estate.
Now, the catch is oftentimes, for tax purposes, you're losing money on residential real estate.
Right,
Even if it's cash flow positive.
right.
Even if it's cash flow positive, you may have a tax because you're appreciating the property and blah, blah, blah. If it's a loss and it's considered qualified business income, it's gonna reduce the deduction that you get, right? Because this loss is offsetting your income from real estate, so it's a bad thing. So the key question in all this is my rental property, is that a business? Is that a trade or business? And just in the last few weeks, the IRS kind of came out with some guidelines, and a safe harbor sort of thing, that if you meet these requirements, then it's considered a trade or business, therefore you get the deduction. Again, that may be good or that may be bad.
Right.
So if you have losses, you probably don't want to be qualified. And if you only have one or two properties, it's kind of hard to make, based on these rules, it's hard to make that a business anyway. But if you've got several, if you've got 4 or 5, 6 rental properties, you could probably qualify, a business if you wanted to. So just tuck that away, keep it, that's something, if you're our client, we should be talking about, and it's not just a cut and dry thing. It may be good or it may be bad, depending on how that all comes together.
We have an agent here in this office who was on a panel, if you guys were here for Wealth Building Wednesday a few months ago, of real estate investors. And she told us she makes $20,000 positive income every month. She's in her 50s and she could retire now just on that,
Yeah.
right? So that would be considered a business.
Oh, yeah.
Yeah.
So
That's significant.
would it, even if it's basically, not, I wouldn't call them apartments, but like they're triplexes?
Yeah.
So if it's 2 triplexes, would you write that as a business?
Well, that would probably be significant real estate and income coming in, hopefully. But again, if you're not making money on it, it could be a negative.
So, I mean, like the 1 unit in each pays a mortgage, and then the other 2
Yeah.
units are all profit.
That's
so-
huge.
Yeah,
That's huge income, because the rents are high in this area. You have a question?
Since the LLC has to be approved by the state, can you run income from a different industry through
Yes.
that?
Yes, you can use it for
Like, yeah, you
other
use
things.
it
Now, whether you
solid.
should and how you
Yeah.
structure it,
That's
that's,
a different question.
that's a different thing, but.
Yeah, the thing though is, like, the Real Estate Commission has all these kind of quirky rules wrapped around it, and like, you can run other businesses through it, but like, you can't, one of the rules is you can't hold it out as a real estate trade or business, so which means it can't have something like with realty in it, it can't have your name on
Right.
it. basically. You know, so
It can't deceive the public, is what they
Right.
would say, into thinking it's its own brokerage company. That's really what's behind the state of
You
Pennsylvania
could own
right now.
rental properties. So.
So, you know, you get to some kind of quirky things about how you,
So you can't
you
be
need to
too,
market the other
you can't be
business.
too creative on the name, I guess is what we're trying to say. It's generally, just so you guys know, you saw one of the examples that Paul put up it was your initials, QA, right? LLC. That gets approved every time.
Yeah.
Because no one would think that's a real estate company. They wouldn't, you know,
You don't tell
be
anybody
deceived.
your name.
Right.
It's not like
Yeah,
you
yeah.
It doesn't
put
even
on
matter.
with your
Wouldn't
client's
use,
name.
real estate?
You would brand yourself your own
Yeah,
name
right.
in our
Right, I would
business.
never, yeah, you
The
would
only
never.
one that sees it is like the payroll company, your.
Yeah, it's not on your business card.
Right.
It's not on
No.
your website.
Becca.
Yeah,
And
I think that
like,
would see, treat it like a company that's got multiple sources.
right, but
it's
like a
the,
fictitious
it's at the
name
top.
almost.
Yeah.
It's a stealth
I have
LLC.
one thing to add, just a little plug for them.
Yeah.
So, this is not my gig, any of this accounting stuff, I hate it, I did horrible in college. So I was set up on, probably Quicken, with my old assistant, kinda kept track, and we were really doing pretty good, and then she had to leave, and then I was like, oh my God, I can't go backwards, like I've gotten myself so organized, I can't go backwards, and Elizabeth from their office had kinda come in and actually trained her, and then what happened is I paid Elizabeth to do my QuickBooks, because I couldn't let it fall apart after it was set up so well. So now it's not Elizabeth, it's Lisa, on that, but, like, you can pay them, I'm not saying everybody should do that, I'm just saying, for someone like me who is not going to do it if I have to. You can pay somebody to do it, she's in my credit card, she's in my bank statement, and she keeps me on track, and because I can't. So they do offer that.
It's like me, when I was a little bit younger, I couldn't wait to make enough money so I didn't have to cut my own grass, because I didn't have time, right? I'm selling houses, I was running, and I'd get home when it was dark, and my grass would be the worst in the neighborhood. And I was a neighborhood realtor, right, so.
We expect people to
If
pay
you
us
want-
to sell a house, you know.
If you hate accounting, pay somebody, make enough money, lead with revenue, pay it.
Well worth it, money well spent. Don't charge me more, but
All right,
money well
so
spent.
these guys are here, I don't know if they'll spend much time, more time yet, but if you have personal questions, I'm sure you can come up for a few minutes and just ask.
Yeah, we'll
them.
be here for,
So, but thank you for coming, get ready for next, Wealth Money Wednesday next month. But these guys are available. Give them a